Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, October 31st. I do not have a costume, but I am wearing blue because my hometown, the Toronto Blue Jays, are playing for the World Series tonight. And let me tell you, I'm feeling pretty good. I'm not going to say anything else, but we're going to be watching. I think it's going to be a great weekend. And we have got a great show planned for you today. Amazon and Apple reported results last night, and we're going to break it all down for you. We've also got two exciting founders coming on the show. One is building at the nexus of AI, data centers, and energy, and the other has gotten a lot of funding to take its shot at the AI customer support market. We've also got two great stories out of our newsroom today. Our crypto reporter is going to come on to talk about how the rebound in crypto startup valuations is going. And we're going to get to our weekend big read about Benchmark, the storied venture capital firm. It's going to be a great show. And so let's get right on into our first guest. Amazon and Apple reported results last night. As usual, Amazon Web Services and the iPhone were big focuses for tech investors. To bring us up to speed, I want to bring on Austin Lyons, a senior analyst at Creative Strategies. Austin, welcome back to the show. It's great to have you.
Hey, Akash, thanks for having me. Got my blue on as well. Go Blue Jays.
Oh, Blue Jays. I like to hear it. Okay. All right. Let's talk about the results. So Amazon revenue, it was up 12% overall. AWS revenue up 20%, which was the fastest in 11 quarters. What were the headlines for you coming out of last night's earnings?
Yeah, what everyone's watching with Amazon is AWS. You know, Amazon, of course, is a big retail business. Retail, it's tough. Margins are slim. It grows slowly. But right now, during the AI craze, of course, Amazon also has a cloud business, and there's huge opportunity to grow that. Historically, people have been pretty bearish. It felt like AWS was falling behind. Azure was having good growth. Google Cloud was having good growth. It felt like AWS wasn't keeping up. They had invested in Trainium. It kind of felt like they didn't have enough GPUs, and actually what customers wanted to rent was GPUs. That all flipped on its head yesterday in the earnings call. It was all about Trainium. Andy Jassy and team said Trainium like 36 times. And the name of the game was basically they're fully subscribed. All their Trainiums are being rented. They just turned on 500,000 of them for the Project Rainier. And they're growing faster quarter over quarter. So now all of a sudden, it looks like AWS, they were right on the Trainium bet, and everyone's happy again.
And we should say, of course, for people who are just getting up to speed here, Trainium is, of course, the chip that Amazon is building for itself, hoping to be in competition with NVIDIA's GPUs. Although Andy Jassy was very complimentary of NVIDIA last night, which is sort of a pattern in these calls. You know, the thing about Trainium here is it's really touting its end-to-end AI platform. The same way Google has its TPUs, Amazon was coming back and saying, look, we've got it too. And the question in my mind really was, okay, he's talking about price performance as a way of evaluating how good Trainium is. Is Trainium actually a better chip? How does it actually stack up against NVIDIA's GPUs from what you're seeing?
Yes, so you're right. So Trainium is an internally designed chip. You can think of it similar to Google TPUs, like you said. You kind of think of it as Anthropic is Trainium's first and best customer. And if you're comparing the GPU to a Trainium, let's call it an XPU. That's kind of the industry vernacular. XPUs generally, like they're usually not quite as performant in terms of like raw flops or amount of memory or networking, because you got to think at the systems level. And of course, you have to write software that's a little bit more custom. It's not CUDA software. You kind of have to port your NVIDIA software over. How it becomes more price performant is that they still have good enough performance, but Amazon, because they've kind of cut out the middleman, they'll rent you this chip for cheaper. So if it might have been $4 an hour for an H100, let's say, maybe you could rent Trainium for, say, $2 an hour.
And that concept of good enough, I think, is something that will be interesting to see how it plays out. You know, there was also talk about headcount, and we heard the news about Amazon's layoffs. I found it interesting that he basically came out and said, look, it was not a financial decision, it was a cultural decision, which is a company of Amazon's size trying to say, we're trying to be a little bit more nimble, a little bit more like a startup. And it almost seems like they're going in the direction a little bit like Mark Zuckerberg saying, we're trying to build a very agile team here as we have to pivot quickly. And so that was certainly something to interesting to see play out. I want to move to Apple very quickly. Apple, it was another big quarter for the iPhone. The company said that they are expecting double-digit revenue growth in the current quarter for the iPhone. What stood out to you about the Apple results last night?
Yeah, I think this was classic Apple getting back to Apple basics. They sell great devices, they sell services because of those devices, and they make good money on the devices and they make great margins on services. And they were back to, hey, we launched iPhone 17, great camera, great user experience, great battery life. People are buying those and we're selling record services on top of it. And so we kind of got away. Historically, we've had a little bit of that distraction of Apple Intelligence and did it land or not. And this felt like it was back to classic Apple, just disciplined and selling lots of iPhones and services to go with it.
How are you expecting the AI story to come back with Apple? Just as you're watching the company and its products, are you expecting it to come more into the conversation? Because it feels like it's kind of drifted out of focus for the company.
Yeah, it totally has. And I think early on there's just a lot of questions of should Apple train its own model or should they, bring ChatGPT in the fold or buy Perplexity? Kind of a lot of that conversation. But really, I think for Apple, it's just how can they make the best devices in a generative AI age, which means on-device experiences. They're working on improving Apple Intelligence, but they're also integrating other players. And I think and by the way, they're also starting to expose with Apple's foundational models on-device generative AI for app builders to build local AI into their apps, just the normal apps you use every day that are third-party apps. So I think over time, we'll just slowly start to see more features coming being invented by third-party app developers, first-party apps getting better, and we'll just start to see over time more local generative AI. And what that means for Apple too is that just means they have to put more memory on device and continue to use Apple Silicon to have enough compute power to do that locally. So I just think we'll see a long tail of it getting better over time.
Right. Well, Austin, there's a lot to take away. We could talk a lot longer, but I appreciate you coming on and helping us make sense of it. That is Austin Lyons, a senior analyst at Creative Strategies. One of the discussions that has come up in big tech earnings is the bottleneck that power is for building and operating AI data centers. Emerald AI is one startup that says it could have a solution to that problem. We reported exclusively that the company raised $18 million this week from a group of investors that included NVIDIA. I want to bring on Varun Shivaram, founder and CEO of the company, to tell us more about what he's building. Varun, welcome to the show. It's great to have you.
Oh gosh, thanks so much for having me.
So you had some big news this week. Congrats on the fundraise. Tell us a little bit about what Emerald AI is.
Absolutely. You mentioned those CapEx numbers, Akash, and they're staggering, right? Hundreds of billions of dollars that are seeking to invest in building AI factories, this next generation of AI. But energy is the single greatest bottleneck that could prevent that future. There's 50 to 100 gigawatts of AI data centers that want to connect that may not be able to connect to American power grids and grids around the world.
Mhm.
Emerald AI, we founded it just under a year ago, 11 months ago, to solve this exact problem. And I think we've just come today to the point where the community and the industry is realizing, oh my goodness, this really is a problem, and here's how we solve it. Just last week, Energy Secretary Chris Wright announced that it was national policy to direct the Federal Energy Regulatory Commission to try and fast track the connections of data centers that can be flexible in how they use energy. And Emerald was founded 11 months ago to make data centers flexible. So we've been preparing for exactly this moment. Because today,
And you guys are kind of interesting because you're taking a software approach to this problem.
that's exactly right. We take a software approach. So in Virginia today, it'll take you 7 or 10 years to connect that next data center. But with our Emerald software that we've been developing, and now we're going to be deploying with NVIDIA, with Oracle, and with others, with our software, we can get data centers connected faster today instead of waiting years for brand new power plants or upgrades to the grid. Because here's what's happening. As we panic and we try and get those hundreds of billions of dollars of CapEx connected to the grid, we end up far overbuilding energy infrastructure that we probably don't need right this second and raising costs for everybody. Emerald AI software, as you said, Akash, we're the software layer that helps AI data centers be flexible in their power consumption.
And so What does the software actually do? So it basically helps balance the supply and the demand of the power. Like, what does it actually optimize for customers?
Yeah, it's a great question. Look, most of the year, 99% of the time, power grids have plenty of power to supply data centers. There's actually 100 gigawatts of stranded power just sitting on our grids today that could supply data centers the next several years of all that massive capex spending. But in very limited situations, the grid will reach a peak moment. We demonstrated this in Arizona in May in our first commercial demo with Oracle and NVIDIA. We demonstrated that you could take a real data center and take the AI computational workloads, and our software would reduce the power consumption by 25% on a hot day when all the air conditioners are running. And so when that grid is really stressed out in Phoenix, the data center's power falls for those 3 hours, and every other time that data center is able to take advantage of that abundant power on that grid. We
Hmm.
did that in Phoenix. That's been now accepted for publication in one of the world's top scientific journals. We did another demonstration then with National Grid, which is the United Kingdom's national grid operator. We've announced a partnership to do a major demonstration of the technology at the end of this year in London, in the United Kingdom, to showcase that AI can be flexible anywhere as our software throttles the power either by slowing or pausing particular AI workloads that are a little flexible, or by moving AI workloads from one location, say Phoenix, Arizona, to
Right.
another location where there's abundant power at that moment.
So you mentioned Oracle. So Oracle is a customer of yours. Sounds like which of the other big tech companies are customers for you right now?
Look, we're delighted that at our Arizona demonstration, we worked with Oracle very closely, and we announced this publicly along with the Electric Utility Association, EPRI, that we're all working together to make AI flexible. In
Okay.
addition, we announced just this week, on the same day that the information exclusively broke our funders, we also announced that NVIDIA, along with Digital Realty, Emerald AI, EPRI, and PJM, the country's
Hmm.
biggest grid in the East, announced the world's first power flexible AI factory at commercial scale.
And
96
and
megawatts.
these are subscription deal? I mean, it's a software. So how is it structured? Is it a annual subscription? How does it work?
That's a great question. So, just very quickly to finish the announcement, 96 megawatts commercial scale. So that means that this data center will be the world's first facility at this scale to be power flexible and to meet the needs of the grid. And that's going to be deployed in Manassas, Virginia. And what Governor Youngkin, the governor of Virginia, said is, look, this is a great deal, not just to get far more AI factories connected to grids, but also to help protect the rates of communities, because rates are going up. But with this technology, you actually make power more affordable. You make rates go down as you have more AI factories come that can help the grid in moments of stress without having to overbuild expensive energy infrastructure.
Right.
How the
Right.
software get monetized? Look, we create tremendous value. Every time you get a data center that's connected faster or a data center that's expanded, say a 200 megawatt data center that's expanded to 250 megawatts, you create several $billion of net present value because you can sell on very lucrative cloud services earlier than you thought you could, or you can upgrade to the latest NVIDIA B300 or Vera Rubin chip. And so Emerald AI is in the business of just making sure that our partners, whether it's the cloud provider, whether it's the data center developer like Digital Realty, or whether it's the utility, everybody makes money and sees values and serves customers. And
Right.
yes, some portion of that value enables us to provide this software. But the critical thing is there's many orders of magnitude more value that we're generating. $4 trillion of investment off the sidelines into the AI revolution without raising everybody's power bill.
Right. Well, great. It's a fascinating approach to the problem that very much is in vogue right now. Like you said, capex and power was a discussion that was very much in the spotlight with big tech earnings this week. Thank you, Varun, for coming on. That is Varun Shivaram, the founder and CEO of the new energy company Emerald AI here on TITV. Okay. This past year has been a boon for crypto, propelled by the Trump administration's loosened financial regulations and the appointment of crypto-friendly officials. To that end, we took the pulse of subscribers to the information, and a new survey that we conducted found that half of readers traded crypto in the past 3 months. 19% say they did not trade crypto in that time frame but have in the past, and 32% have never traded crypto at all. Bitcoin, Ether, and Solana are among the most bought cryptocurrencies in the past 3 months. They are, of course, three of the biggest cryptocurrencies. And you'd think with the number of crypto IPOs we've seen this year, those would be popular buys, but readers mostly stayed away from IPOs. In the last 6 months, just 6% bought Circle, 4% bought Bullish, and 3% bought Gemini. That is all compared with the 15% of readers who bought stock in crypto's most mainstream company, Coinbase. For more subscriber insights, head to theinformation.com. We will link the story in the show notes. And speaking of crypto, my colleague Yueqi Yang published a great story today on how the crypto mania in the public markets is causing much excitement in the private markets. I want to bring on Yueqi to tell us more about that. Yueqi, welcome back to the show. It's great to have you.
Hey, Akash.
So you had this great story here today, and I want to start with Kraken because you had some great reporting on the company and its status with fundraising. What did we learn about Kraken? And then we'll talk about the private markets at large.
Yes, so Kraken is a very popular name right now among investors in the private market, largely because they are seen as the next major crypto company to go public, potentially next year. And it's being reflected in the valuations that they're getting. This summer, they were able to raise funding at 15 billion valuation, but really quickly after that, now they're raising at 20 billion valuation. And this is a trend that we're seeing across multiple crypto companies in the private market, where they're all seeing this big jump in their valuations just over the past 3 months.
And one of the things I like that you pointed out there is you took a look at some of the valuation multiples for Coinbase and where it's trading right now. And Kraken is actually trading based on that new valuation somewhere in the same ballpark, right?
Yes. Yes. Based on the full year revenue from last year, Kraken's valuation, if they do get to be able to close the $20 billion valuation round, it will be similar to the valuation multiple that Coinbase is getting. And this is very interesting because usually when investors invest in private companies, they're taking on more risk, especially in the sense that their shares are not as liquid as public company shares. And they're also taking on the risk that the IPO may not happen or may happen at a later point than they expected.
You also mentioned some of the other IPO candidates people are watching. It's not just Kraken, it's BitGo, Polymarket, Chainalysis, Anchorage Digital, Fireblocks. There's a whole host of private companies in crypto that people are watching. What's driving the excitement right now in crypto? We talked a little bit about the regulatory regime right now and how that's changed. Is it all that? Is there anything more fundamentally about blockchain being integrated more into the traditional financial system? What's driving all the excitement?
I think the regulation factor is still a big piece, and that's because given how friendly the U.S. regulatory environment has become for crypto companies, the prospects for these companies have become a lot brighter. They feel like they're no longer under scrutiny, they're no longer facing enforcement actions from the SEC, and that gave investors more confidence that these companies will be able to do well in the longer term, and they will be able to gain more mainstream adoption. But then at the same time, the valuation is very high right now, and that's something that even crypto investors are acknowledging. And I think for these hot pre-IPO names, investors are trying to kind of find the right balance of getting into interesting assets, but also not trying to overpay too much for the stake.
And we should say one of the things you point out in the story is it's not a sure thing once you go public. You look at a company like Gemini, another crypto exchange that went public. You point out in the story that it's actually trading below its IPO price right now. Do we have any sense on why Gemini is lagging its peers? Is Kraken more of a Coinbase? Is it more of a Gemini? Where do we think it falls in that spectrum?
Yes. So I think initially, most of these crypto IPOs are doing very well, at least on the first day. And that's just reflecting the enthusiasm investors have for crypto names, because for a long time, Coinbase was kind of the only game in town in the public market if you want to get crypto exposure. And now there's all this pent-up demand from investors where they will just buy up almost any crypto name that's going public. But now what we're seeing, and suited example of Gemini is that as more crypto companies are going public, investors will have more choices and they will be more discriminate, and they will be able to scrutinize the business performance of each individual name and assign valuations based on that.
Because
So
they actually have comparable companies now to stack them up against. I think that's a great point.
Right.
Speaking of which, very quickly, Coinbase reported earnings this week. What were the headlines coming out of that print?
Coinbase is doing very well. Their revenue increased 55% from a year ago, largely riding on this trading boom that happened during the quarter. Another interesting thing that contributed to their growth is that they're aggressively expanding the number of tokens that are available on the Coinbase platform. And as we know, during the prior administration, Coinbase was on the more conservative side. They couldn't list as many tokens as they wanted because a lot of these tokens have unclear legal status. They might be seen as unregistered securities by the SEC. And now that's no longer a concern for crypto companies. So Coinbase moving very aggressively to take advantage of that.
And it looks like they're diversifying their revenue pretty effectively away from trading revenue as well here, right?
Yes, I think their revenue is still a large part of it is coming from trading, but they do talk more about wanting to become a stablecoin payments service provider as well. And that's an area that I'm watching closely to see to what extent they can actually generate meaningful revenue from stablecoin payments business. And that's something obviously that's very different from the DNA of Coinbase, which is essentially a trading platform.
Well, like you said, as more of these companies go public, it's going to get great. It's going to be great to be able to compare and contrast the trading performances of all of these exchanges. Yueqi, I want to thank you for coming on. That is Yueqi Yang, our crypto reporter here at The Information. Okay. AI customer support has become a crowded arena, but it hasn't stopped investors from pouring money into it. Another company in that category is Maven AGI. The company most recently raised $50 million in June, and its investors include Dell, Cisco, Lux, and M13. I want to bring on Jonathan Corbin, the founder and CEO, to talk about where he's taking his business. Jonathan, welcome to the show. It's great to have you.
Thanks for having me here. Good to see you again.
So tell us about what Maven AGI is and what its unique angle is to the customer support AI problem.
Yeah, Akash, have you ever had a bad customer experience?
All the time.
I had one last night. My cable decided to stop working. And what we're in the business of doing is helping people to prevent those from happening. We work across the entire customer journey from end to end. Whether you're having a bad customer experience because your Comcast cable is not working, or you want one single point of interaction across that customer journey, whether it's sales, support, making sure you're getting value of your product. That's what Maven's helping companies to do.
Okay, and so I mean, break it down for us. It's like an automated chatbot type thing that companies can use to handle customer service requests.
I think it's really interesting, Akash, because in the old world, we kind of forced, the ML models and the legacy providers, we forced our customers into the hours that our team would work. Hey, sorry, we're only going to provide you with support between 9 and 5 on Eastern Standard Time because that's when we work. What we've realized is customers don't want to be beholden to the hours that your teams work. They're using your products 24 hours a day, 365 days a week. You shouldn't have to work on the schedule that the support team works. And so what we found is in order for you to be customer centric, you don't want to just offer chat support. You need to be where your customers are when they're looking for support.
You want to do it around the clock.
That's right. Yeah. And whether it's voice, whether it's text, WhatsApp, voice messages, you search, what we understand is that most companies have 3 different types of customers they're trying to support. You have the digital natives, you have people who are looking for an interaction so that they can validate the answers they're getting.
Right.
And then they want the human touch. And so we've built out a product that allows us to be able to support the customers that each organization has, regardless of which category they fall into.
So why are you better than companies like Decagon, like Sierra, like Ada? This is a very crowded space.
It is a crowded space. And I think, it's really interesting. When you have all the different players in that space, each of the CEOs are going to tell you something different, Akash. The ultimate measuring stick is what customers are saying. And what our customers are saying is, I went out there, I compared you to every other player in the marketplace. Companies like Clio and Thumbtack went out and evaluated 50 different folks in this space. And they said the reason why I chose you is because you produce the best results for our customers across that entire customer journey. So I think it's easy for us to get distracted by headlines, by investor claims. At the end of the day, customers are the ones that matter.
So let me ask you this: you've named the company Maven AGI. Surely you must have some sort of a concrete stance here on the debate that is ongoing with AGI. Where do you fall on that? Is it 2 years? Is it 20 years? Is it even a thing that we are aiming for here? What's your take on it?
Yeah, I think it's something that we're going to see in the next couple of years. There was a recent study put out.
Like closer to 2 or 20?
I think it's within the next 3 to 5 years.
3 to 5 years. AGI 3 to 5 years. Okay, and what exactly? How do you define it?
For us, we're very focused on the business problem. And so, how do you help departments be able to take action at a higher level place? And so, before starting Maven, I spent a number of years at a company called HubSpot. And what we tried to do is we tried to get our customers to get value out of the product by doing things like setting up a marketing campaign. And that kind of makes sense, right? Like if you're purchasing a marketing product, you do it in order to obtain leads. For us, when we think about business AGI, it's being able to tell the system, Maven, hey, produce 100 leads for me next month. And it takes care of everything else. That's how we think about business AGI and where we're going as a company.
Let me ask you this. Are you guys getting any interest from buyers? Any acquisition interest?
I think there's a lot of players in this space. We're very focused on building a durable, sustainable company.
Because that's how I see this shaking. I mean, there's so many different players. It's very fragmented in some ways, but the big tech companies are also building in it. I mean, don't you think this is just going to all get consolidated in the next 2 years or so?
I think we've gone through trends from an industry perspective. When you look at, the cloud computing and you look at mobile, you saw, kind of periods of consolidation happening. And I think what we saw is that companies with the best products are the ones that end up winning because your customers vote with their dollars. If you don't have the best product, you're not investing in that. If you're just doing a side project, you're not going to win in this space.
Well, it certainly is an interesting space to watch, and I love seeing all of the new companies raising money. Jonathan, thank you so much for coming on. I really appreciate it. That is Jonathan Corbin, the CEO and founder of a new company in the space, the company Maven AGI here on TITV.
Thanks for having me.
Okay. It is Friday, which means we've got another big read for you. This weekend's feature story discusses the storied venture capital firm Benchmark. The firm got a new general partner recently, and its approach to venture has been a bit different than the rest of the sector. I want to bring on Natasha Mascarenas to tell us more about what she found. Natasha, welcome back to the show. It's great to have you.
Great to be here. I had fun earlier this week.
I was going to say, it's you were the face of the show. You did. I was awesome. I loved watching it. It was a really great episode.
Thank you. You have a hard job, but I had a lot of fun at WTF.
And I'm excited to play a few more highlights for folks here of your conversations and conversations from the on-stage panels that we had. Let's talk about Benchmark, though. So you've got this great story out this weekend, and Benchmark is a firm that people probably have heard of, although it's kind of a smaller firm in some ways. There's less people to do the talking. Tell us about where Benchmark fits in the venture capital ecosystem and why it is such a storied firm to begin with.
Yeah, the simplest way to understand Benchmark is it's the anti-Andreessen Horowitz. It's a small fund. It's a small partnership. It does, each partner may do between 1 to 2 investments a year. Started about 30 years ago, and that strategy has not shifted. I mean, they still raise around a $420 to $500 million fund every few years, and have lasted through several cycles doing exactly that. And so my inspiration for this weekend's big read was really looking into how that strategy is playing out when check sizes are getting bigger than ever and AI is testing a lot of assumptions for how venture capital should work and where investors should put their money.
Do you talk about looking at how that strategy is playing out? How is it playing out?
Yeah. So, like I said, focus and restraint has been their big differentiation for the past 3 decades. Where Benchmark is showing up in AI today is definitely not in the large language models. So it's not in XAI, Anthropic, OpenAI. It's not in Thinking Machines Labs, which is not an LLM, but still is a company that's requiring a lot of capital, post-launch. Where it is showing up is really around the software stack. It's made a few hardware investments in Cerebras, a chip company, but a lot of their investments have stuck around software because the firm's partnership does, and has really invested behind this idea that you don't want something that needs too much capital to prove if it works. So a few investments that you may have heard of is Mercor, which announced this week that they have raised at a $10 billion valuation. They've also invested in Cursor, which is made by AnySphere, as well as a few other software-first businesses.
And I should say there's a great anecdote at the start of the story about how Benchmark actually courted Mercor, because it was quite the process and very emblematic of the broader story that you tell here. Talk to me about this new general partner that they have, Ev Randall. Was this a surprising hire from your view? And how do you think that reflects the changing strategy of the company?
Yeah, I mean, listen, a big part of my job is knowing who is most likely to leave their venture firms and start their own fund. So I will go on the record to say I was surprised to see Everett leave Kleiner Perkins, where he was on our next GP's list.
Right. We thought he was going to be a GP at Kleiner, really.
Yeah. And he was high up at Kleiner. But yeah, I mean, this was a big big win for next GPs, but it was also huge poach for Benchmark. All of the 3 partners that were running the firm had kind of did a joint effort to recruit him. It comes from the landscape of Benchmark losing about half of its partnership either through departures or Sarah Tavel stepping back earlier this year into a venture partner role. So a lot of people, the big question this summer at every cocktail party was who Benchmark's next GP will be. We got an answer during this reporting process. And yeah, I mean, Everett is someone that Rippling CEO Parker Conrad is talking to often, has done investments in SpaceX and Anthropic. And so what I'm looking at is what those first deals are going to be like for Ev, because he obviously does have a later stage focus. And while Benchmark is, not saying anytime soon that they're going to break away from Series A startups, 20% stakes, my big question is if we see Ev either break the mold or at least get them to shift a little bit.
Let me come back to where you started this, which is you called Benchmark the anti-Andreessen Horowitz, and they might be at two opposite ends of the spectrum. But I wonder if throughout your reporting process, you sort of learned anything about the way in which Benchmark's shift might say something about the VC industry as a whole.
Definitely. So a big part of the story was digging into where they are making bets in AI. Where does it, how deep are they going? How much are they fighting for? So like I said, Benchmark usually is going for a 20% stake in companies. The biggest change that I found is that they have made exception to that rule time and time again. So with Cursor, they own less than 1% of the business. With Mercor, they own around 10% of the business. With Sierra, Brett Taylor's company, who I spoke to for the piece, they own around 15%, which not a huge departure from 20%. But where I see Benchmark shifting, and where they have shifted in previous cycles, but it's really showing up in AI, is being more flexible in how much they're willing to own of the business. I don't see them being flexible on board seats just yet, but that's another thing to watch for going forward. And yeah, I mean, Kleiner Perkins, when Ev was there, made their exception to backing, they had not yet backed an LLM. But then Ev, as well as the team there, did back one. And so the other, question mark I really have is if Benchmark 2 will make an exception anytime soon.
Mm-hmm. Well, Natasha, it's a great story. Again, it is our weekend big read here at The Information. I encourage everyone to go check it out. That is Natasha Mascarenhas, our venture capital reporter here at The Information. Well, we are still riding high from The Information's WTF Summit. We had the opportunity to speak with some major media players, including YouTube and Tubi, about their strategies. YouTube Chief Business Officer Mary Ellen Coe was on the main stage talking about the shift in the way people are watching content. Let's listen in.
The living room is our fastest growing surface. So double-digit growth in the living room. We are in the US, we're now coming on 2 years of being the #1 streaming platform by quite a margin at this point. And it's exciting because people think about, living room, that must be entertainment corpus, but it's all your favorite creators, it's educational content, it's live football, and it's short form video. So a lot of people are watching short form video in the living room, which is also exciting. Podcasting. Podcasting is our fastest growing new format. We're now the #1 podcaster in the world. And it's really shifted video as a means to, people like to watch podcasting in their living room, which is, kind of just, these trends are, happening, as we speak.
how has the rise of the living room affected sort of the algorithm and what content does well? And for creators in the audience, like how should they think about the rise of that platform?
Yeah. So we spend a lot of time looking at what are best practices in the living room, because a lot of our top creators now are seeing more of their growth coming out of living room. And you'd think there was, this kind of formula to that, like, only creators who upload in 4K because, you have incredible resolution. But, what we see is all kinds of formats. So short form podcasting, long form. And people are watching just a broad range of content, music videos as an example. So what we try and do is make sure that we're launching product innovations that allow creators to have a big screen experience, like series. Like, what if I want to watch episodic series? So currently, if we made you a recommendation, it may not be the exact next episode in a series. And we're getting more and more creators who want to do scripted content. So if you did scripted content, you as a creator can now upload a series so that as a viewer, I can watch that in a sequential order. Dynamic thumbnails. So, when you get on and, you have this incredible video experience and it's rolling into the content, we've just launched that. So it's really trying to make the most of that surround sound experience and visual experience, but to creator-led content.
We also spoke to Tubi CEO Anjali Sood about how original content plays into their broader strategy. Here is some highlights from that conversation.
We have a very expansive view of storytelling, and we really platform a wide variety of stories, and it's Hollywood blockbusters, it's originals, it's creator content. But the types of originals that we do are designed to speak to Gen Z. And we know that matters for advertisers, but it is mostly just to drive engagement among Gen Z. So I'll give you an example. We're the highest performing Tubi original. It's not something that you would expect on a subscription service. It's not a movie that costs millions and millions of dollars that's being put out in the box office, that's being marketed on billboards. We took a Wattpad story that had a lot of followers, and we turned it into a movie, and it was starring and executive produced by a TikTok influencer. And we did zero marketing for that title, and it was a huge hit. And we are doing that more and more. And so I think it is just understanding who is the audience that we serve and stand for, listening to what they care about, meeting them where they are, widening our aperture for what's quality, what's talent, what's possible without just money. And it seems like it's really working. And I think for brands, it's giving them access and reach to the audience they can't find.
That was Anjali Sood, who I should say will also be speaking with us on our Monday show. I'm excited for that conversation. And that does it for today's show. A reminder that we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show on Monday. Have a great weekend. Let's go, Blue Jays. We'll see you on Monday, folks. Have a great weekend.